Hello and welcome to another update video about Doge. On the Doge chart, we can see of the June lows a potential diagonal structure unfolding. It is not large enough to really call it clearly bullish, but we've already highlighted a while ago that on all crypto charts we are going to follow uptrends until support levels break. The Doge chart so far was quiet. It now broke above this July high for the first time, well, since it occurred, really. So we have this horizontal line. I think we talked about that in the last video. That was here at around 8.4 cents. And we really needed, first of all, a break above the recent swing high, 7.8 cents. Then a break above 7.5, 7.8 to get here to this 8.4 cent level. With that, we've also reached the minimum expectation for a third wave in a diagonal pattern. How do we determine that? Well, typically in a diagonal pattern, we typically say that in a third wave, first of all, it's an ABC structure. That's what we always have in a diagonal within these. Okay, not always, but the vast majority of diagonals are corrective structures. So in a diagonal, in a third wave, we want to reach the 100% extension of wave one. This is, however, the bare minimum. Normally, for a more healthy wave 3, we want to reach the area between the 1.236 extension and the 1.38 extension. That's 9.3 cents or 9.76 cents, respectively. Surely, cryptos can always extend. I mean, they are only the ideal levels. Extensions cannot really be predicted, but it's worth to still expect them, especially in a third wave, especially when the market overall shows some bullish tendencies. Just highlight, because sometimes people say, oh, you said it goes there, but it is all about understanding these are the ideal targets when they have occurred and when they are reached, and we can say, okay, we track this pattern with more confidence. We will then start to watch for a pullback in wave 4 at some point, and we can track the support level, and then the wave 5 should take it higher, but I cannot really give you a target for wave 5 until we have wave 3 complete, and there is currently no signal that wave 3 is complete, so it might actually touch the top of that trend channel, maybe touch the 1.236 extension. It has a good chance, in my view, to go higher now after this after this latest push to the upside, right? But again, it's the ideal target or the minimum target, for this third wave here is fulfilled. But ultimately, has it bottomed or not? Probabilities for that will only increase after we really have 5 waves up. I mean, you could argue they might have increased with Bitcoin moving, but that's what we need to see. The problem is also, I would still prefer another low. Very honest with you. It just has to do with the structure. It's really only moved in corrections since June 22. So only 3 waves up. I mean, I would have to count either this as the low of the bear market then, or we will have to count this as a truncation, which is probably the better way to do it. So it just means that even though it didn't make a new low, we have to just count it as the low and just have to accept that the market maybe wasn't able to form that one more low, even though it was due to Bitcoin moving and the whole market in sentiment, which has shifted. So sometimes when there is another low to do, but it would be needed really, but for example, there's a shift in sentiment to something, the market just cannot complete the normal pattern. If you then see evidence that the market is turning to the upside, you can consider a so-called truncation, but it's really only an exception. So it's nothing I would normally do. But yeah, this is what we need to see. And the 5th wave then can take it to around about 10.5 cents. But again, that depends on how high the wave 3 goes. Might even be possible to reach here 11.6 cents if the 3rd wave extends a bit higher. Now, this can still be just a B wave rally, which results in another C wave to the downside. That is still a possibility, absolutely. But that actually starts from here. It could still be an ABC, move down. But I need to see a support level break. And what support level would that be? Well, it would be the support level that is normally relevant for a wave 4. Now that we have reached the minimum requirements for this 3rd wave to the upside, we can track the support for the wave 4. Now the problem is, in a diagonal, we cannot really trust these fib levels so much, so we have to be a bit flexible with them. But typically, I would say that wave 4 is getting too unreliable with a break below the golden ratio, with a break below the 61.8 retracement, that's at 6.8 cents. So if we see a sustained break below that level, I would have to assume that, yeah, something more bearish is going on and it might take another attempt to dip into the yellow box. So I will not take the bearish count of the chart at this stage. So for now, I think it's all about just watching if it can fill in 5 waves, and then the subsequent pullback should provide a nice setup, or you are watching for a pullback into the orange box. But yeah, this is up to you, of course. First of all, also Doge would need to break out of this trend channel. That would have bullish implications. And yes, I am tracking an uptrend, especially since we have reached the minimum requirement for a third wave. But there is more to be done to really shift probabilities clearly into that direction. That's my update about Doge. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.